Chat Capital, what's good? Top Shred Lords. How we doing? How we doing? How we doing? What the business is, y'all? We just out here trying to make some smart money moves, y'all. That's literally all we're trying to do. That's it. Let me get set up, chat. We gotta make some moves.
No watch, no diamonds, no watch, good timing, yeah.
I can't believe a life without you's what I'm living through. And how I wish that there was more I could have given you. I don't think that there's a part of me that somehow isn't you. Ironic that it hits so different how I'm missing you. I miss how we used to watch football on Sundays, and how I told you that you should be on the runways. I think of how I met your mother and now we're not even friends. So I stand anxious cause I can't sit calm in my place. I still practice what I'd say in case you call me one day. I think of how I used to put the biggest smile on your face, and then I think of my mistakes. It's my fault that we can't have the life we always dreamed of, that we wanted to save. At least I saved all our photos, and yeah, I saved all our playlists. I keep our stuff like I don't know how to delete what we made, and the truth is I still got that money set aside in my savings for that ring and that wedding and our first down payment. I've been holding on to hope that you'll be back, that'd be great. I'm just wishing that we stayed, I didn't think we could fade. And I love you still, but you said that your feelings have changed about us, so I called a jeweler, and instead of your ring I bought a gold chain to chase the pain away. And my heart aches, the strength that feels the same as the propane it takes to make a flame. But it went away, and it's okay, yeah. My gold chain, it takes the pain away, but I rotate to feel in different ways, and I go back and forth like every day. But
What y'all talking about? Oh, we got the early birds, Edwin and
I was
Chris.
frustrated cause you said that you love me, but I felt like you lacked the patience for foundations I wanted to build for us so we could make it. But you were good with the weight and didn't want to suffocate me. You
Chat,
just
chat,
wanted to
chat,
hurt me.
what's
It was all
good?
my insecurity, my lack of maturity. I thought you were hurting me, but you were there curing me.
How are
I've
we
been sad,
doing?
but lately there's a chance that you hate me, and baby, I don't think it's crazy to think that you should
What the
blame me
business
for
is? What y'all
being
talking
the
about?
reason maybe that we didn't work
Chris
out.
and Edwin.
I take accountability for where we're at.
He
now.
gave me that
I
push.
respect it, but honestly, it's
Y'all
killing
y'all
me
vibe
how
coding
you
something?
moved on, and the thought of us you're happy without. I'm sorry I wasn't ready. I'm
I don't
sorry
think I
I
need glasses
didn't get it.
tonight. I don't
I'm
think I need
sorry
glasses
wasn't
tonight.
who you
How we
probably
looking? How we
thought
feeling,
that you
boys
meant when you
and
saw me
girls?
in that place when I made you laugh out of breath, and I'm sorry I was your boyfriend.
Y'all
and
heard
failed
about
to become your
healthcare?
best friend. I miss the
Y'all
smile
heard
on
about
your
healthcare?
face and your lips, how they taste.
Oh,
I wish my only
snap.
closure was my hands on
There's
your
a lot
waist
going
and your
on,
arms
dog.
around my neck. To me,
There's
that
a
was
lot going on in
everything.
the
I guess
world.
I only have one option now,
So
and that's
much
to
going on.
replace you with my gold chain to chase the pain away, and my heart
What
aches, the
is
strength
the
that feels
vibes? How y'all doing? You happy? You healthy?
propane it takes to make a flame, but it went away, and
Catch me up. Catch me up. How we doing? Happy Tycoon Tuesdays, ladies and gents. Happy Tycoon Tuesdays. Hope you guys are having an immaculate, amazing day. Hopefully the weather has simmered down for folks out there in Texas. We got an exciting agenda of things to just broadly talk. Let me take this headphone off. We got a lot of exciting things to talk about today. It's warmer now. That's good. That's good. Thank God. Thank God. Hopefully you can see that. Oh, I forgot to check Instagram. I haven't checked it yet, but I'm gonna check the Discord. We got so much to chat on. Oh, wait, Twitch isn't even live yet. Hold on. Let's go live Twitch. Sorry, Twitch. I'm gonna catch you up, Twitch. Twitch, catch up. Let's get our settings going. Hey, y'all see we up for Chat Capital. We're up 0.4% today. You know what's crazy is like these very small marginal movements that we're seeing in our capital, like that actually does wonders once this thing starts to scale and compound. You know? Granted, we're sitting at $1,000 of Chat Capital AUM right now, but if we made 0.4% and we were at, let's just say we had $1 million portfolio. We would have made $4,000 today. You know, we would have made $4,000 today. Where do I see it? Where do I see the business? Where do I see it? But the things that we got to talk about a lot of stuff, guys. Markets are like very exciting right now. It's just like a very, very, very exciting season in the markets. There's a few things. I think we definitely got to talk about this healthcare stuff. Like a non-political oriented conversation around like what's happening with these healthcare names. Just the fact that these things are, wait, hold on. You guys see that? Whoa, snap. I'm looking at our bottom ticker. I love our ticker because it keeps me updated with like what's happening in the world. SATS is up 5% today. Ondas is up 9.8% today. P-Lab's up 3% today. Yo, markets are just cooking. Like this watch list of ours, it's like Boogie would be really excited to see what his Echo Star is doing. That's so impressive. 4.8%. Okay. All right. This is nuts. So far, Boogie's, I'm looking at the returns to date so far for the portfolio. And so far, let me show you guys I love tracking these things so that we can just like hold ourselves accountable. But in terms of the things that Boogie pitched, and Tenzin and Thomas and Will and Jackson, so far, Boogie's up 4.8%. Ondas is still down, but they're ripping today. Ondas is up a lot today, right? So it's overall up a lot today. Coupang is up a lot today. Caterpillar is up overall. Hey Tenzin, how you doing, man? So good to see you, legend. Happy freaking Tuesday. You told me to buy SPY calls. You didn't put it in the pitch, like the official pitch. You gotta put it in the official form. These are like official pitch forms. Right? Or something like that. But it's just like the watch list. And then my little favorite ones here. My favorite ones here out here doing numbers, yo. They're out there doing numbers, chat. Like all of our things are just like super exciting. Lumentum, LIT is up 11.5% today. Nvidia is good, but it's just like people are starting to realize that there's other really cool names within the AI value chain. Sats, Ondas. Like, what's the big news? Let's check out what the big news is. Oh, you put it in Discord, Edwin? Thank you so much. I'll check it out in the Discord. So we got to talk about this deal that Edwin brought to us. We're going to see if it's a good or bad company. All right. We're going to see if it's a good or bad company. So I want to like, I'll pitch it, but you know, if Edwin was here, he would pitch it for us and we would see like theoretically, like if it's a good or bad deal. And I've never seen it. This is gonna be like our first reaction too. Like I've never seen the business. So I'm going to be very curious to see like exactly what's going on, with this business. And then we got to talk about healthcare. Oh, snap. Alex Saber, what's up, twin? Yo, Alex, you're getting away a little bit too much information out here, dude. All right, we can't be out here giving folks carried interest, all right? All right. Well, maybe. It depends on how you structure the deal. Like if we somehow provide the LP capital to this and Edwin is doing all the day-to-day operations, running the thing, executing on our value creation initiative, and he helps us facilitate an exit, and he can get us 3 to 5 times min-MOIC, then possibly we'll give Edwin some carried interest. Edwin, talk to my guy, Alex Abel. He represents us on the Holdco side, all right? Alex Abel represents Chat Capital on the Holdco private equity side, all right? Get in touch with Alex Abel. Alex Abel, are you in the Discord? You need to get in the Discord, man. You can start seeing all these ideas and pitches. Ayo Power, what's up? Nadal, I remember that name. What's up, twin? How the heck you doing? Happy Tycoon Tuesdays, man. Happy Tycoon Tuesdays. I hope you're having literally the most immaculate day that you could ever possibly have. I hope everybody is. But all right, back to what the heck I want to talk about today. We got to talk about Edwin's really cool deal. I wanted to get smarter on the markets. There's like a bunch of things happening in healthcare. Like we got to get smarter real quick on healthcare. Like I'm not a healthcare investor. Like that's my first thing I will say. I'm not a healthcare investor. I've never bought a healthcare stock. I don't even have healthcare. So I know I'm legally supposed to, but it's like since being an entrepreneur, I've been eating an apple a day. Right? He says, "Don't start." Tenzin, are you against healthcare names? All I'm saying is, like, let me show you guys a preview of what we're going to discuss today. Let me give like a little mini preview of what we're going to discuss today. Like, I want to show you all such a massive, wild reaction to something. Like, dudes, look at this. Not that, this. You guys see this? This is insane. You know what I'm saying? Like, this is crazy. We out here. Healthcare is literally just, oh gosh. And then over the course of a year, ooh, oh, healthcare. Oh, healthcare. I don't know. Nadal, you buying healthcare? Edwin, you buying healthcare? Alex Sable, Chris, you guys buying healthcare? Huh? Who else in the chat? Who else in the chat? Say hi if you're in the chat. Who else in here? You guys buying healthcare? Look at this. Look at nope. Nope. And I'll just say this right off the rip. I'm not buying healthcare either, but we will, you know, do what we can to just learn about it, you know? Just to learn about it. You know what I'm saying? I am intrigued to just learn about it a little bit. Anyone who held got forwarded, but it's undervalued or not? Yeah, it's I really don't know. Healthcare is such a sensitive space. Like I have one of my really good friends. Oh, Chris, thanks for being on Twitch. Appreciate that, man. I have a really good friend that's he's an entrepreneur and he's in the healthcare tech space, right? So he's working on something that's like a massive solution for this entire ecosystem. And he asked me what my thoughts were before we even started building this. And he's building it in Michigan right now. He used to be the top VC in New York, left to go back to Michigan to build this thing. And I'm like, bro, if I'm keeping it a buck, one of the best things you can do is honestly just acquire an existing like healthcare related business instead of trying to go 0 to 1 in this space. And he's like taking that feedback positively and he's realizing that like it's a really good solution. But then also warned him. I was like, bro, you could be the greatest entrepreneur in the entire world. You could have the most incredible solution that's driving such a quality improvement in the access and quality of health for people globally. But like, it's such a politically sensitive industry. Like it's such a politically sensitive industry. And it's just like one like whiff of anti-healthcare sentiment, either in a geography or from some politician or something. It's just like one bad whiff can just like drastically hurt your, you know, earnings profile, revenue prospects, and kind of like the regulatory environment of what you operate in, right? Like just imagine how drastic business models had to change. I'm not too informed, but is healthcare like medical insurance? It could be various things. Like let's look up the healthcare value chain. I guess it's not all just insurance. That's top of mind right now because of all that. But there's like a really, really, really big like what's a good one to look at? I'm trying to find a good one that's not boring. Boom, boom. Here we go. Oops, security check. Whoa. Let's go open this in a new This is a good image. Quality sucks. Um, this is a good image. Quality sucks. But like, get a glimpse of this, guys. Like, you have people that purchase healthcare. You have people that provide financing and management of that. You have the you have like the intermediaries that provide access to care, right? And then you have the people that actually deliver care. That's the hospitals, the physicians, the pharmacies, the One Medicals of the world. You have sort of like the distributors of that access to care. And that could be like group purchase organizations that are helping, large companies get access to healthcare for their entire workforce, wholesalers that are like selling different like insurance products and all that. There's a bunch of just like things. It's like a distribution layer. Like I don't like the naming of this, but like this right here, I will call this end users, underlying customers, right? Like if you want to think about the overall healthcare landscape, I really don't like how they labeled this, but like the best way to describe it is on the left, you have end customers, end users. This is government, employers, individuals, anyone that like needs health related services. They're the end customers. You have intermediaries that help unlock that. And that's like insurance companies, benefit managers. Then you have the actual kind of like providers. These are the folks that are actually providing health related services or products, hospitals, physicians, your local pharmacies. And then this product intermediaries, it's kind of like, it's a really confusing name, but you can just think of that as like distribution layers to just help magnify the access to health related services. And then you have the producers and like operating businesses within this overall health services and healthcare ecosystem. And these are people that are doing pharma and bio research and labs, medical device, medical equipment, health, hospital IT systems and services and equipment providers, little things like that. But this is kind of like the overall healthcare ecosystem. And if I had to like invest in a layer of it, I'm on the operating business side. I think that's probably the most attractive, in my opinion, right? I think that's overall probably the most attractive layer. What do you guys think? What do you guys think? You know, why did it drop? We're gonna Dalton. You're asking the $1 million questions. We're gonna dive into that together, literally, and we're gonna go from like 0 to 100 to figure out what truly is happening in healthcare. Like, let's do it right now. I'm actually down. Anything. I know Edwin. We're gonna get to your. Edwin has a deal actually that he wants our thoughts on. We're gonna do a deal review with Edwin, so that's gonna be super cool. Stay tuned for that. We're also going to. You're about to buy in? Oh snap, Dalton! Be careful. And first and foremost, this is not investment advice. This is simply diligence done in public. So all investments need to, take your own risk, right? Distribution is too tied to regulatory stuff. And it's like the margins are pretty thin on that. Like you don't have that significant pricing power when you're just like a group purchase organization, So that's that. Well, let's understand healthcare. Let's understand healthcare, right? Probably the most important place to start is looking at United Healthcare stock and trying to fund, like, healthcare is on fire right now. And like, we need to drastically understand like what the heck has happened. Earnings just came out for United Healthcare or United Health Group. And like, I just really want to understand, like, why is this down 20% in one day? But then also, why is it down 50% in the last year? Everyone needs healthcare, right? And granted, I know it's a very politically sensitive topic. Like, you let me know your thoughts on healthcare down below. But it's kind of like, from an investor and fundamentalist and value-oriented investor lens, I want to see if this is a entry play, if it's undervalued. And Dalton says, I'm about to buy in, so we're going to figure this out together. And I think one of the best places to start is looking up their presentations. Their presentations, right? We need to figure out from... Okay, what are you asking for all this stuff for? Your opinion matters. Not today. Not today. Hold on. Let's see. What kind of presentations they got? Latest reports. Here we go. January 27th. Let's look at this, guys. You with me? Let's understand what's happening here. All right. The chart says one thing, but like the actual fundamentals, they say completely they could potentially say a whole different thing, y'all. All right? They could potentially say a whole different thing. Do we all know what United Health does? I think that's a good place to start. Like let's first go to Gemini and say, I'm looking to do hedge fund style diligence on United Health Group to understand business fundamentals, industry trends, and more importantly, what's happening in the narrative with earnings, i.e., why is it down 20% today and 50% in the last 12 months. Think from a deep, value-oriented Tiger Cub style hedge fund and produce a memo for me. We're going to do that, but we're actually going to go to Google Finance for this, guys. I think Google Finance is probably the best for this. Let's go to Google Finance. We're going to go to United Health. Right here, down 20%. Paste in our prompt. Business fundamentals. Let's actually figure out from Google Finance, one of my favorite platforms to ever exist, like what is truly happening. And let's dive into this together, y'all. So I'm a novice. I don't know anything about healthcare. What is it that they actually fundamentally do? They are doing two distinct services. One is United Healthcare and then Optum. The company is currently navigating significant. Okay, let's figure out what this United Healthcare thing is. They provide healthcare benefits to individuals, employers, and government programs through Medicare and Medicaid. Okay, so this is the insurance side of the business. And it focuses on affordable coverage and access to quality care. They served 50 million customers, and this piece of the business generated $345 billion. $345 billion. That is massive. Oh my goodness. All right. Then this is the tech and data layer. And this provides healthcare ecosystem, payers, care providers. This makes a lot of sense. It makes a bunch of sense that they have this Optum layer because, like, if you're serving and providing insurance, and by the way, if anyone has health insurance, you understand like how detailed the underwriting process is to gather insurance, right? So all of this underwriting data and underlying insured person data is actually a very monetizable product, which they've then converted into Optum because they have all of this health insurance data. They're leveraging that to help power the rest of the healthcare ecosystem. That's kind of genius from like an operating business perspective. But okay, so they have Optum Health, Care Delivery, Optum Insight. That's what I was just talking about. And then their pharmacy services. So they're just trying to do everything. Who's their end customers? All right. Individuals and employers, commercial health insurance plans. Wait, now I'm confused. I thought they're the insurance platform. Why is their customers, are they like health insurance customers are, what? I'm confused. All right, government beneficiaries of Medicare Advantage, and then Optum serves the payers, care providers, etc. All right. Wait, I don't understand the customer segment. They're providing insurance, right? Why is their customers other insurers? You see, AI needs to explain this better for us, you know? We got to figure this out. Vertically integrated business where one division, United Healthcare, is an insurance provider. Okay. Individuals, employers, and governments. Okay, so the key customers is individuals and insurance. Okay. Okay. Okay, so AI just got that wrong. So not actually selling to other customers. Their end customers actually like individual employers, right? Not this. I don't know why I said that, but individuals and employers. That's like their key customer segment. And then government employees that are part of the Medicare Advantage and Medicaid programs or like consumers that go through the government for that insurance product. All right, that makes a ton of sense. That makes a ton of sense. These net margin profiles are like sub 3%. That is like, bro, we literally looked at a gold business yesterday that had 81% EBITDA margins. Why would everyone buy healthcare? We could just buy gold royalty and streaming businesses. Okay, so let's figure out why it's down. Week 2026 guidance, and we're gonna look at that in the earnings. But United Health forecast a full year revenue decline for 2026. Full year. They mean that we're gonna lose money. We're not gonna make as much money in 2026 as we did in 2025. The first time they did that in over 3 decades, as it plans to exit unprofitable Medicaid states and adjust pricing. Okay. All right. And then this is really big news here. This is really big news. So Trump actually came out and he proposed, and I think it was either today or like this week, a flat Medicare Advantage reimbursement rate, which is below the increases that they're usually doing, right? So like while folks like United Healthcare are able to bake in annual increases in the premiums for their health insurance, Trump is proposing a flat rate. Okay. Interesting. It's the largest Medicare Advantage provider, making this a significant headwind. And the medical costs, of course, everyone knows that like going to the doctor now costs an arm and a leg, even though you're trying to get your arm and a leg fixed. And then one-time charges and restructurings. Oh, they had cyber attacks, business exits. Oh, they're just going through a lot right now. They're going through a lot right now. Value-oriented bull case. I don't want to read that because I'm not a bull on this. I'm kind of bearish. But okay, that helps me understand broadly, fundamentally, like what's happening with the stock. Now, revenue grew 12% year over year. EBIT was $19 billion. Here we go. In the last 6 months of 2025, the company laid the foundation for a more disciplined and transparent operation, stronger performance, and sustained growth throughout 2026 and beyond. Whenever you see phrasing like that, that just simply means in the last 6 months, we worked our hardest to right our wrongs. In other words, we know that we're chalked. We're trying our best to get better. All right. They really lost. Imagine losing $800 million due to cyber attacks. Isn't that crazy? $800 million due to cyber attacks. That's insane. That is actually insane. And then restructuring costs. I don't know what that was from. But let's see here. Where is the forecast? They're trying to hide the forecast for 2026. Okay. Financial performance, United Healthcare. These are the different business units that they have here. And let's see which business unit is like performing the worst. Let's see if they break it down. No, they don't break it down. We got to read through it manually. All right. So United Healthcare is growing. The employer and individuals grew slightly. Here, this is important here. The number of people served decreased by 80,000 people year over year, with growth in employer-funded offerings more than offset by attrition in both groups, fully insured and individual products. Okay. Medicare and retirement, that grew 23%. That's probably like their highest growth segment. And then community and state grew 17%. People served contracted by 55. And they didn't even mention if it grew or fell. You see how their phrasing was kind of interesting here. Total growth for it grew. Okay, so this segment's actually growing. These segments are contracting. This segment is also contracting. Hi, David. How you doing, man? There is a backbone. This thing is huge. Granted, this thing is like huge. It's like it's a too big to fail type of thing. I think it's too big to fail. And then this Optum product, $270 billion. So their Optum business does $270 billion of revenue when their health insurance business does $345 billion. Isn't that crazy? That like a tech solution and offering like this and like data-oriented thing is like that impressive of a revenue profile. Like, you guys got to know, like, some small countries don't even have a GDP of $270 billion. It's just fascinating. But the big drivers of the Optum business is, of course, the Optum Health one, and then the Optum pharmacies. So their pharmacy services business is crushing it here. Okay. I wonder, do they own the pharmacies? Optum RX. Like, let's see what Optum RX. Welcome to Optum RX. Order prescriptions, pay your bills, manage your health information, etc. Okay. So it's like a delivery service. Get your monthly insulin for $35. Huh. So it's like a marketplace to get affordable medication. And it's like they're enabling logistics to kind of like get access to your medication or anything you need from the pharmacy like relatively quick. I assume that they probably partner with like delivery partners. And I assume this is kind of like the underlying fundamental layer of a lot of those direct to consumer oriented businesses that are pharmacy specific tech businesses, like health tech companies, right? So that, like, looking at this kind of website, it's not really like crazy consumer friendly. Granted, possibly, but I assume that they have probably some white labeled services or partnerships with other folks that are in like the health tech space. That's more like crazy branding for health tech pharmacy businesses. Let's see here. Does Optum own some pharmacies? I said pharmacies. Let's see, I don't even know how to spell it. Go back to school. Own some pharmacies? Or what's the business model of Optum RX? Seems like their best segment. Right. We also, AI didn't give us enough context around like broadly what's happening with like the like overall regulatory healthcare landscape. We need to dive a little bit more into like regulations. We talked a little bit about like the reimbursement rate, proposed flat rate that Trump put out. And that's like scary for a large insurer like United Health. But I think we got to understand a little bit more around like what's on the docket in the House and the Senate as it relates to healthcare stuff and like how that will actually implement. Oh, you said analyze healthcare data? Which specific healthcare data? What do you think? Oh, you said Optum RX is burning cash? Well, yeah, it's like a growth segment, but these things can turn and print cash pretty quickly though. All you do is like turn off like marketing. All right. Large pharmacy benefit manager. It would also directly owns and operates a network of pharmacies. So they own some pharmacies, but not in the traditional sense of the large chain like CVS or Walgreens. Instead, their pharmacies are specialized. So they have specialized pharmacies that manage complex, high-cost medications for conditions like cancer, multiple sclerosis, and inflammatory disease. Genoa Healthcare. This is a network of community pharmacies located within behavioral health centers. Genoa, I've been there before. I heard of that. I had to go buy farm or medication for a family member one time in Genoa. I didn't know they were owned by Optum RX. Wow. Home delivery and infusion services. They have mail to order pharmacies, home delivery. Okay. So this directly negotiates drug price and rebates with manufacturers and pharmacies to lower the cost. Okay. And then they dispense. Okay. It's literally fully vertically integrated. This is like a vertically integrated healthcare business, essentially. I mean, it makes sense. They're massive, and they use the data to manage formularies, improve adherence, and provide cost-saving insights. Okay, this is like a pretty genius tech-enabled way to like manage the healthcare ecosystem. Revenue there reported wait, Nadal. It says here that they reported operating earnings of $7.2 billion, so it is profitable. Right? Long-term growth prospects of 5 to 8%. All right. But we need to go deeper. I really want to understand why the stock is down 50% in the last year. Give me deeper fundamental analysis on the business, its trends across recent earnings releases, regulatory environment, etc. I need you to go second and third levels deeper. Come on, chat. I need to get smarter on this. I'm getting smart, but I'm not smart enough right now. I need to really understand this stuff. I want to leave this being the smartest healthcare investor of all time. Maybe not of all time. All right. Let's talk about this here. Okay. So it's creating. So essentially, it's a perfect storm. You guys see this? Perfect storm of operational, financial, and regulatory headaches that is destroying investor confidence in the healthcare space. I like how they phrased that. I really like how they phrased that. But let's talk about this here. This right here, this is the main thing here. Increase in its medical care ratio, which is the percentage of premiums spent on patient medical care. Do you guys get that? Like, this is fundamentally how healthcare works, right? When people give out insurance, they give out insurance and they hope that you never use it. Does that make sense? Like, that is the business model of healthcare insurance. Like, the goal is you pay a premium for insurance and then you never use it. Right? That's like the picture perfect world, to where people are just like incredibly healthy, but they just have it as a backup plan that they just pay us. And then it becomes just like a freaking subscription software model where you're just like paying for a backup, but you never actually need to use it. Right? But the cost basis for some of these businesses like United Health is when there's a huge jump in the medical care ratio, meaning like the amount of, actual needs in a health system, right? People using their actual, insurance. I mean, it's very like basic and simple, but it's like people kind of like get too far in the weeds and forget the bigger picture. Like, the bigger picture is like, this company, United Health, makes money if he gives out healthcare to everyone in the world and they never use it. But apparently, according to the data, we are seeing some spikes and jumps of the amount of, folks that are actually using their health insurance. I mean, I think it's a W for people, but, let's dive a little bit deeper, though. Let's dive a little bit deeper. The MCR spike. The adjusted MCR significantly jumped from a stable range of 82% in 2024 to 88 to 89% in 2025. That stuff matters. That's like a 5% jump. And mind you, they have hundreds of millions of people using it, right? So that's a pretty noticeable jump, okay? Impact on earnings. This directly squeezes profit margins. We already talked about that, right? As more people actually end up using their healthcare, it reduces the overall operating margin profile for some of these insurance businesses. Mr. White, how the heck are you doing, sir? First and foremost, I like this message. What's it say? What do you recommend to a boy trying to beat life and enjoys the everyday game? I haven't met someone who thinks like me to turn unreality to a reality, and I understand that comes with time. Been watching videos, they are sweet. Well, first and foremost, we're going to get back to healthcare in a second. I just want to say welcome. You have entered a community of like-minded individuals. You say this sentence, I haven't met someone who thinks like me until today. I want to introduce you to Nadal, Duvid, Dalton, Tenzin, Chris, Edwin, Richard, Rich Topic, A Boogie. I want to introduce you to my friends. All right? These are the Shred Lords, and they are easily some of the most ambitious, disciplined, focused, supportive people you will ever meet in your entire life. So I just want to say that. I will give you a complete playbook of how to crush this game called life, because I am playing the video game too. But first and foremost, you got to join the Discord. And it's not a gimmick. It's just like more of easy for logistics so you can meet more people. So like join the Discord. I think it's a really useful space for you to be in to meet other like-minded folks. I think you will truly be surprised to learn how many other people there are out there that got a little bit of dog in them, that are trying to stack XP every single day. Like my entire premise, I'm literally treating every day like a video game. every day like a video game, just like Solo Leveling. I don't know if anyone watched Solo Leveling, the anime, but my life is literally a video game. And my only objective is to stack as much XP every single day across content, the holding company, and my faith. Those are the only thing that matters, right? So I'm gonna get back to you in a second, Mr. Wright, because we got to finish this healthcare thought before I lose my train of thought, and I have a very, very, very low attention span. So we're cooking right now with this healthcare stuff. But I just wanted to say hi because I saw your message, and it made me smile and it made me very excited. And I just wanted to say you're in the right space and in the right place, Shred Lord. Everybody say hi to Mr. White. Say hi to Mr. White, guys. If you're in the chat, anybody watching, say hi to Mr. White. And introduce yourself. Just say, hi, my name's Boom Boom Boom. All right, guys? So everybody in the chat, just say hi, Mr. White, too, so that he can feel welcome in the community. All right, guys? All right, but back to the task at hand. Yo, Rich Topic, what up, twin? Back to the task at hand. Okay, so everybody knows the impact on healthcare earnings is that if these health insurance businesses needs to pay a lot more premiums because folks are actually using their healthcare, it goes down, all right? It's the higher utilization play. And they're seeing historically high utilization and medical costs. Why does this matter? Why does this matter? This matters primarily because we are seeing a large aging population, aka baby boomers, that are Medicare and Medicaid oriented populations. And they are spending so much on care. So much on care, right? Doctor visits, medication, exams, all kinds of things, right? And it's just like, it just naturally makes sense, you know? It naturally makes sense to where we have like an aging baby booming population and they are just naturally expensive people, right? So I think it's very much worth looking at that utilization question there. And this data kind of shows it that, like, look, jumping almost 3 to 5% and the impact on the margin profile, that's small, but these are hundreds of billions of dollars, so it kind of matters. That's just one. But there's another huge headwind that's facing this industry, and that's the regulatory side. That is the regulatory side, right? So Trump is proposing, as I mentioned, this flat Medicare Advantage reimbursement rate. It's pretty much zero as it relates to the 4 to 6% increase that folks usually get, right? This is kind of tricky. This is kind of tricky. I want to understand this a little bit more, so we're gonna like ask chat to like give us a little bit more details on this. Let's gonna copy this, all right? But we gotta circle back on this. I want to understand exactly how this works and what this truly means. So the funding cuts from the reimbursement rates, and they're seeing significant membership decline. Oh, wow. Losing some members. I don't know where their members are going. And then they have DOJ. Oh, okay. This one's the political yellow flags, red flags. Apparently there's a lot of like mess going on with Medicare billing practices and inflating diagnosis to receive higher Medicare Advantage payments. We're not going to talk about that one, but it's in the eye of the beholder. But it sounds kind of concerning. All right. And this is kind of like the finance stuff where it's talking about like the earnings and the valuation. You got to think about that. It's all about relative valuation, right? Like, why would I invest in a very scary contracting healthcare ecosystem when I can literally buy AI memory stocks, right? And like oftentimes sector-wide declines are just a factor of just investor appetite rotating away from a sector or a name, right? These things are small, but let's understand this real quick. I'm not understanding this part completely. Really break this down for me. I love how AI can do this for us. I want to understand this to the deepest of levels, okay? Like literally the deepest of levels. This is how it works. So the federal government, through the Centers for Medicare and Medicaid Services, pays private insurers a fixed monthly amount per enrollee to manage their health care. Insurers then use this money to cover medical costs, administrative expenses, profit, and supplemental benefits. The bidding process. Insurers bid annually to offer plans. The government sets a benchmark amount for each county. If an insurer bids below the benchmark, they receive a portion of the difference, aka a rebate, which must be used to offer better benefits. Okay, this is getting complex. Stay with me, guys. Lower premiums are reduced to reduce cost sharing for seniors. The risk adjustment. Payments are adjusted based on the health status of enrollees. Okay? Sicker enrollees generate higher payments. The stock collapse stems from a massive gap between what the market expected versus what the market proposed. Wall Street analysts in the insurance industry expected a payment increase of between 4 to 6% for 2027, in line with medical inflation trends. Okay? And so are going to increase. But Trump wants to keep it flat. Trump wants to keep it flat. I don't understand this one as much. Did you understand this? Okay, let's read this one more time. So the federal government, through the Center for Medicare and Medicaid Advantage Services, pays private insurers a fixed monthly amount per enrollee to manage their health care. Insurers then use this money to cover medical costs, etc. So they pay them a fee to manage kind of like their enrollee base of individuals that need health insurance. Okay? It's like a white labeled solution. They're outsourcing it. Okay? Insurers bid annually to offer these plans. The government sets a benchmark amount for each county. If an insurer bids below the benchmark, they receive a portion of the difference, a rebate, which is used to offer better benefits, lower premiums, etc. Simplify. Simplify this for me. It's so complex. Right? All this score and all that, like make it very simple. Yeah, this stuff is very controversial, but I'm just learning. So I'm just learning. And by the way, I have no equity in any healthcare business at all. I don't even have health insurance. So I've been swinging it. An apple a day, literally been keeping the doctor away. So pray for me. Okay, let's really understand this. So the government pays a fixed fee. The government pays United Health a set amount of money every month for each person enrolled in a Medicare Advantage plan. Insurance responsibility. United Health uses that fee to pay for all of the medical costs, doctors, hospital, and drugs. The government sets a baseline price for how much they are willing to pay for an average senior in a specific area. United Health submits a bid to cover these seniors. The rebate. If United Health's bid is lower than the government's benchmark, they get to keep a portion of the difference, aka a rebate. The rebate money is crucial because it is used to offer extra benefits not covered by traditional Medicare like dental, vision, or gym memberships. These extra benefits are what attract customers away from competitors and traditional Medicare. Okay, so it's a retention mechanism. Now we're learning it, right? It's like a retention mechanism. So if they're able to bid below the government's benchmark, they're able to collect a piece of that difference and use that to reinvest into some of the extra things that they cover, like dental and vision, and then also cover some of like the supplemental health benefits like gym memberships, skincare, ClassPass, little things like that. Like when I was at KKR and I had health insurance, I was able to get away with like using my health insurance for like other health related services, like gym reimbursements, preventative like skincare, good glasses, like reading glasses, little things like that. So that is the rebate there. And it's really cool because that is something that consumers, individuals actually care about. So if a health insurance plan covers a lot more of that stuff, and the only reason why they actually will offer some of that stuff is because they're clipping more of that rebate. Keep in mind that rebate, right? But if my health insurance plan doesn't offer any of that, but the next one does, I'm switching to that health insurance provider. And as a business, fundamentally, getting all of the controversial nonsense out of the way, fundamentally, your main objective is to keep customers and get more, right? That is the only thing that truly matters. Keep customers, so prevent churn, and increase your customer count. And this right here, this rebate thing is the key driver of underlying unit economics of customer retention. Woo, we're cooking. All right, now we're learning. Okay, now the health check. So fair payment. Not all seniors are the same. A sick senior costs more than an average. Yeah, duh. Okay, adjusting the fee. The government adjusts the fixed monthly payment based on health status of each person. United Health gets paid more for covering a sicker person and less for a healthier person. This ensures that insurers aren't penalized for taking risk on patients. Okay. So the 2027 rate shock meant that government's allowance for 2027 was barely changing, even though medical costs are rising much faster, 7-10%. This forces United Health to cut benefits and raise costs for seniors just to break even, which is why the stock crashed. Ooh. You guys get it? You guys get it? It's all making sense. It's all making sense. All right? Let's say this again. The rate shock. And by the way, the stock market hates when there are things that are unexpected that pop up. Like when things are unexpected, that's when things get scary. Because the market is a function, the stock price is a function of, all of the available information and a consensus around expectations. When there is new, random shocks or gotchas out of nowhere that impact the industry, that is new data that is now drastically going to influence the market's consensus of all of the available information. So this shock here, which is like a recent announcement, this shock right here has changed the algebra for how these businesses are operating and how they're thinking about customer retention. And it's really, really key. This is the most important thing you need to take away from this video, right? From this stream, is that the 2027 rate shock says that instead of rebates increasing on average 5 to 7%, it is now going to barely change, but their underlying cost basis of medical costs and care for these senior patients has increased at a record pace. It's a squeeze happening here. And in order for them to maintain their EBITDA margin profile, since they are publicly traded companies and investors care a lot about profitability, they have to cut benefits and raise cost. And all of that is very red flags for the underlying consumer. Because if they cut my benefits, if they know they're going to cover my gym membership, screw it. I'm going to Aetna, Cigna, whatever, right? I'm switching. You know what I'm saying? But also, what's really key, and this is important, listen up, y'all. It's not really like, oh, Kenny left, so we're okay. Or, oh, Edwin left, so we're okay. No. Typically, we work at jobs that have really, really, really big organizations. And like, you're going to see organizational churn. So it's not just like individual churn, because these decisions are typically made at like a large group purchasing or like a employer level. So if they're cutting benefits, they're essentially cutting benefits for all of Dreamline or all of Chat Capital or all of Google, right? So all of the employees there are going to have to like pivot. So now all the employers that used to be on United Health, given the dynamics here of the price increase as well as the cost cutting of these benefits, these companies might churn over to somewhere else. So it's not like, of course, there's going to be individual churn, but it's likely going to be even more noticeable at like the enterprise customer and group purchasing level churn. All right. It's a churn conversation. That's what's really scary here. Like this stock right here, it's a churn conversation, right? It's simply a churn conversation of folks that is leaving the broader coverage basis of United Health Group, right? Now let's see, where are they churning to? This is where we let AI figure out where we need to be deploying capital. Where would customers, governments, and group purchasing organizations churn to? Seems like the value or the competitive cost effectiveness and moat of United Health is deteriorating. So where are customers going? All right, we're not stopping here. We just learned the setup. That doesn't make us good investors. What makes us good investors is figuring out where the dollars are flowing. All right, this is Chat Capital. Smash that like button, y'all. We're cooking right here. We're learning everything about healthcare. I love this. All right. So the competitive landscape is fierce, and its moat appears to be deteriorating due to regulatory pressures and rising costs, and customers have a bunch of other options. All right, here we go. Now there's individual employer plans. So primary competitors for national employer accounts are these like Elevance Health and CVS's Aetna. All right, CVS's Aetna. Then for the government ones, the dominant rivals are Humana. Okay, wait, this is huge. So Humana, Aetna. For Medicaid, you have Centene, Molina. There's so many options to churn away from, right? Then the Optum Rx. I don't think this is that, severe there. But I think the competitive landscape here. All right, now, from a long, short investor, where is the most attractive investment in this space then, given everything going on? Is it a competitor? Is it a different piece of the supply chain? Where should we explore deploying capital, given the changing dynamics? Where's the money? Show me the money. What are we rocking with, all right? I gotta know. I gotta know here. So, while the entire sector was punished by the MA rate shock, analysts point to a more diversified player as potentially more attractive. So, CVS Health, of course, they have Aetna's insurance arm, and they have their large retail and MinuteClinic network that has a little bit of insulation from that. Is well positioned to leverage its physical footprint to manage care more effectively. Let's see how CVS has been performing. Oh, it's also took a hit. But overall, it's up 28% instead of down 50. All right. So it does net seem like a better business. Elevance Health, strong focus on commercial plans and significant market share in local markets. Okay. So what about ELV? Granted, everyone's going to be hit by this rate thing, all right? Because I think it impacts everybody. That's also hit. Yeah, stock sucks. All right, next. Humana is heavily exposed to Medicare Advantage. So I think anybody that's exposed to Medicare Advantage, they're going to get hit by this. So I think all those suck. I'm passing on all those. Transparent PBM services. Smaller, more transparent PBM models are gaining market share. Okay. This could be to deploy away from the big... They don't give me any names. All right. Hospital operators, HCA Healthcare, medical tech, areas like robotic assisted surgery, intuitive surgical. Hold on. I saw this on Twitter. Remote patient monitoring and AI-enabled diagnostics experiencing high growth and represent a different risk profile. Okay. Let's see this. 5 years. Okay. Yeah, that sucks too. All right. So, chat, we're going to vote because I think, granted, it's a lot of mess going on here, and I don't see if I'm forced to invest in healthcare, I'm switching jobs. That's my thoughts. But I want to hear your guys' thoughts of what are we going to be doing about healthcare? Invest or avoid? What are we doing about healthcare? The healthcare sector, all right? The healthcare sector, all right? What are we doing besides becoming doctors ourselves? Vote on the poll, guys. I want you guys to vote on the poll of, based on everything that we've learned in the market dynamics of what we are seeing, as well as the universe of available opportunities, right? Granted, there's a universe of so many different available opportunities to deploy capital. Are we putting some of Chat Capital's dollars? Should we put some Chat Capital's dollars into healthcare? And if you press the invest button, I would love to hear where. you think we should be investing within the healthcare space. All right. Because based on everything I learned here, I can't find anything. Right? So I can't freaking find it, guys. I can't freaking find it. But based on everything that we're seeing, where do you think we should actually invest in healthcare today? But if you think we shouldn't, we're going to find some other alternative opportunities. So we just have to stay tuned to see like how we vote on this long term. Yeah. Is healthcare going away? Probably not, right? This could create like a fundamental it could just create like a fundamental dislocation and like probably attractive entry point. Because look at like how the United Healthcare stock perform over the long term. Right? Whoa. Right? Like this is serious. Like over the long term, it's up 71,000%. And we are so far off of its all-time highs in the glory days back in 2023, 2024. So keep in mind, folks, literally half of like the entire market cap of this business was wiped away in a year. There are some serious questions to ask when it comes to this name specifically, as well as the space broadly. Like, is this the start of a secular decline to get back into like the long-term average of where this thing should be trading at from a valuation and like a market cap perspective? But if this is just a short-term blimp, hold on, y'all. If this is just a short-term blimp and there's going to be expectations of reversal back to the traditional and normal rebate rates, best believe you're going to see these stocks rip. Best believe you're going to see these stocks rip. If this is kind of just like a rumored conversation of rebate rates being flat for Medicare Advantage populations, and next week, if it's anything like tariffs, right? If it's anything like tariffs, to where like tariffs is like a conversation to where today it's one thing, tomorrow it's the next thing, then this could be very much a fascinating space to like look at, right? That's a really good point, Edwin. Let's add it to our watch list. Let's add it to our watch list. Let's add it to our watch list. We need to make this more dynamic, actually. I'll fix this later. But healthcare might be worth spending a little bit of time in, given the dynamics. UNH. Adding UNH. All right. All I'm saying is we are adding this to our watch list. That's all I got to say. We are adding United Health to Chat Capital's watch list. Okay. We're going to make this more dynamic. When do we add these? Let's just assume. Right. And then all right. We're going to have a little bit more of a dynamic watch list. Hey Dub, what's up, man? P. Pushing B, pushing B. Right. And then what's the Google Finance? It's price and then date. There we go. That's what I need. That's what I need. Oh, hold on. Price. And then just do this, right? Hmm? Put this here. Equals P4. A. Okay. Date. Didn't I literally just do this? Someone please help me with this. What's going on with this? Anyway, all right. Oh, we can do yesterday's price. Because yesterday's price is not today's price. That's better. And we can just see like the overall gains. That's better, chat. Oh, whoa. There we go. We can just see the daily ones. Hey, Dub, what's up, man? Ambulatory surgery centers. Stocks. SGRY. I don't know about that one. I don't know about that one, A-Dub. If one were to invest $10,000 in UHS, the worst case scenario would be he loses the money. If it were to go up, unrealized gains would be massive if one wouldn't mind the loss. That is facts. That is facts. That is facts. Wait, Nadal, were you the one that pitched GE? I saw GE in our stock pitch. Guys, somebody pitched GE. Right? Somebody pitched GE. I don't know who it was. Was it you? Was it you, Nadal? Should we go through this thesis? Should we go through that thesis? But the moral of the story when it comes to healthcare, make sure you're covered. All right? Don't be like me. Also, make sure that you live a healthy lifestyle so you don't have to rely on the insurance or the doctors or anything because costs are rising. That's the main thing that's going on. Costs are rising. So just make sure you eat an apple a day. You invest in your physical health, your mental health, you eat healthy, you surround yourself by positive, healthy environments, you smash that freaking like button, and you do your best to focus on the controllables of you living a healthy lifestyle. And with that, you won't have to rely on these folks. But this is United Health, y'all. Take it or leave it. Let me know down below if you think it's an investment opportunity or not. And I think that answer is in the eye of the beholder. And I'd be so curious to see what you all think. I'd be so curious. And we picked 75%. 75% said invest. There could be a play. There could be a play. That's the poll results, y'all. We have so much more to talk about. Now, if one were to invest 10,000 in UNH, the worst case is that they lose their money. The unrealized gains would be crazy. Also, Nadal, you were the one that did the you were the one that did the General Electric ticker. Okay. So we have a new pitch. Any questions on healthcare? I think we learned healthcare so far, right? But we have a new pitch. General Electric. And it's a formal pitch, right? It's a formal pitch. Okay. What's your conviction level? High conviction or low conviction? Or are you just curious about learning about the name? And then what's your hold period? You didn't put anything here. We need to have the hold period and the what are your thoughts on there? All right. But we're gonna dive into this. Let's go Google Finance. GE. Granted, the stock is massive. It's up 52%. It's been a consistent climber. Decline in the past month after its recent earnings report, driven by analyst concerns over a slowdown in future revenue growth despite fourth quarter estimates. Sentiment suggests continue. Okay, do we know what they do? Does everybody know what they do? Oh, it's for learning purposes. Okay. So it's not for the portfolio then. All right. Want to learn? I'm down to learn. I'm down to learn about GE. Let's freaking learn. Let's freaking learn, dude. Let's freaking learn. You know the best spots for us to learn. GE Aerospace. All right. And I want to see the presentation. So let's read about GE Aerospace. Oh, they just released earnings too last week. Oh, you're Canadian, Mr. Snow? Definitely seems costly, but I believe America has tons of opportunity. Is health insurance free? Wait, slime for real? That is the literal definition of GE. I don't think you all understand how big GE is. GE does literally everything. Commercial, defense, avionics systems, electrical power, and this is like huge power stuff, software, and that's just in their aviation segment. Then GE Healthcare. Hey, what's up, Noah? GE Vernova, the businesses that they have here. They have power, energy, wind, electrification, software. But we're looking at the aerospace business. All right. And so for the aerospace business, selling their engines, GE engines, to the aerospace industry, let's try to get a sense of like what is happening. So the amount of orders and bookings that they have has increased 32%. The adjusted revenue growth, 21%. Operating profit, 9.1 billion. Okay. Generating solid free cash flow, nearly 100% conversion. Brianna, we're going 1641. How are you doing, legend? Look up for GEV. I'm bullish on it. Massive winner on IA energy infrastructure. IA or AI? Canadian healthcare is free? Bro, sign me up. You got a free dental plan as well? What the heck? But is like, okay, so it's free in Canada, but like what's the quality like? Like is it really good? And one employer fibbed on my taxes, so I had to fill out a bunch of forms, went door knocking to his house to get it settled. Dang. Hey, you gotta do what you gotta do, right? You gotta do what you gotta do. They can't be messing up your insurance, man. That stuff is really insurance. It's really important. Oh, GEV. What's GEV? Oh, this is what you're talking about. Okay, so this is GEV is a GE Vernova, and you're really bullish on this. So both of you. So you and Nadal are very bullish on like this broader. Wow, hold on. Energy equipment manufacturing and services company. Okay. Hold on. To Google Finance we go. Let's start from the basics. This literally is like the most diversified business in the entire world. Hands down. There's like a billion ways to play and invest in GE, right? It's just like there's GE microwaves, there's GE grids, there's GE engines, there's GE software. And I'm just curious to figure out where there's GE healthcare. I'm just figure out to figure out where in the world is the play to make some cash. All right. So we're going to take a look at three very distinct GE businesses: GE Aerospace, GE Vernova, and then GE Healthcare. All right. We're going to do a quick sprint across all of these. So let's go to GE Aerospace real quick. And then we're going to get really quick because Brianna, we're going in the chat, wants us to look at GEV. So this is GE, their engine business. All right. 3.5 billion passengers flew with GE Aerospace technology, aka engines, under their wing. That's incredible. That sounds like a pretty sizable moat. I think the other big engines include like Rolls-Royce like engines, and some other big ones. But I think GE has, I think, a pretty strong competitive moat when it comes to just like dominating broadly like the commercial plane engine space. And then 1 million people flying at any time on a GE-powered aircraft. 3 out of 4 commercial flights powered by our engines. That is a real structural moat. That is a real structural moat. 3 out of 4 commercial flights are powered by GE engines. That's something, y'all. That's something. All right. Overall, things are going up and to the right. 32% order growth, 21% revenue growth. And this is all for 2025 fiscal year, by the way. $9 billion of operating profit. They're crushing it. And free cash flow of $7.7 billion. So that free cash flow conversion is like pretty massive. Okay. All right. And then look at this momentum. Look at this chart. Look at the projections of what they have going into 2026. They're expecting the free cash flow to continue to increase and have stronger conversion. Granted, not as much as it was in 2025, because I think it was like a record year, but things are just getting more expensive. And then what else? What else is going on? Commercial services, engine deliveries. I think they have new engines coming out. They have durability kits for new engines and overhaul shops. New engine agreements across narrow body and wide body platforms. All right. At the Dubai Air Show. That's kind of cool. I wish I went to the Dubai Air Show. This is wow. I'm actually kind of excited about this. All right, hold on. Where's the investor layer? Google Finance. We're tapping you in. Where's my analyst? Here we go. GE. You know how I love to start my prompts. Act as if you're a Tiger Cub, Julian Robertson trained hedge fund looking at GE. While it seems attractive with strong market positioning and moats, 3 out of 4 flights using GE engines. What is the underlying narrative for the stock and business fundamentals in 2026? Go super deep into the key unit economic layers. We need to understand unit economic layers driving the stock. All right. We're prompt masters here. All right, y'all. Let's dive deeper. I guess it uses the same threads. I don't need to do this prompt anymore. We just need to focus on a new sector. But let's see what's happening here. All right. Here's the memo that AI put together for us when it comes to GE. So they're now a pure play aerospace and defense company, and they did their spinoff. So does anyone know about the history of this? So historically, GE used to be all one company. Then a handful of years ago, they worked with banks to perform one of the world's most complex spinoffs to take their energy business, their grid business, like their financing business and all that, to spin it out into different companies. Some of them went to go become bigger public ones like GE Vernova, and that's the one that Brianna Ragon wants us to look at. But then there's also some that were sold to private equity and other strategics. It was kind of like not a fire sale, but kind of just like a, hey, here's a garage sale of everything that's GE related, you know? And then their healthcare business, they spun that off into its own publicly traded one as well. So let's figure out what's been happening. So there's been a little bit of pullback, and the online narrative is a transition year while record backlog and pricing power collide with supply chain bottleneck. Okay, that's important here. The aftermarket annuity. Ooh. Okay. This isn't just about selling new engines. It's about the decades of high margin maintenance, repair, and overhaul services that follow. This is really important here, right? This is super, super, super important. Like, they not only are dominating every 3 out of 4 flights are using a GE engine. Oh, Mr. White, thank you so much. Hope you come back, man. We stream every day. Not only are they powering almost 75% of commercial flights, the existing engine ecosystem of like all the engines out there in the world, a lot of them have the GE stamp on it. So you have one revenue stream of new engine sales, which they're crushing it at. But they also have a huge servicing long-term maintenance and repair contracts for some of the old engines that they sold into the marketplace. I like that. All right, the Razor Blade model. So they sell OE engines at near cost to secure long-term service agreements. And this is the service revenue, because the service revenue is a lot more margin accretive. And they have a huge record backlog of the new ones. Their pricing power is the current market supply due to talent shortage and post-pandemic demand surge for air travel, giving GE significant pricing power on spare parts. Okay. And then key unit economic layers driving the stock. So number one, the LEAP engine inflection point. LEAP engines profitability turnaround. So this is like their new engine. Okay. So it's no longer going to be loss making. And then LEAP engines that enter are now going to start entering their first high MRO cycle. Okay. Wait, US has fleets? Wait, no, yeah, AI blimp. The GE9X headwind, short-term pain. Not all new engines are profitable yet. So they're trying to like launch this new engine for these Boeing 77X planes. And it's these things are losing a lot of money, and they think it's going to expect to double the loss on that going into 2026. Okay. So like some of these engines are profitable and it's starting to kick into that key maintenance and repair cycle, which is going to have good service revenue, but they're also investing into these like GE9X engines, which are not profitable for them. Okay. So commercial revenue is expected to grow in the mid-teens. Commercial equipment revenue grow also, but a higher mix of equipment shipments relative to services can create a near-term headwind to overall margin expansion. So let's see what's their consensus around revenue mix. All right. Does GE anticipate higher or lower? Does GE anticipate more service or equipment sales in 2026? Like that's the key thing. Let's get a little bit deeper here. Stereotype of engineer solving the world. Will we do the business next? Yeah, I'm gonna check it out. I'm actually gonna check Discord right now to see if I can see it. Edwin. Discord, business buying. I can't. I have to log in. Or wait, hold on. Oh, there it is. Okay, yeah, we see it. Wait, this could be cool. All right, we're gonna check that out in like 5 minutes, Edwin. 5 minutes. I just want to get smarter on GE. All right, let's get smarter on GE. So they anticipate significantly more revenue from commercial services, the aftermarket maintenance, that's the W model, versus the original equipment. Okay, I like that. I think that's a fair play. Like looking at this, like the margin implications, the mix shift can actually, okay. So what's the narrative? Is this a buy or short? Go deeper into fundamentals, analyst expectations, and customer behavior and recent commentary from earnings across this business, their competitors, and their supply chain. Give me the patterns. That's what AI is good at. Give me the patterns here. That's what matters most, okay? Dubit, what's happening, man? We out here making smart money moves. We learning. So this is what matters most here, okay? Because I want to have a clear investment memo of whether or not we should be buying or shorting this thing or holding it, whatever the consensus is. And I want to bring all of the pattern from the recent earnings, their supply chain partners' earnings, and their competitor earnings to draw the big picture of what's happening with this stock. All right? Because as we can see, GE has literally been ripping this year. And let's see what AI thinks. Most people think it's a buy on the street. And the consensus among analysts, and these are like the big Wall Street banks that put out large equity research reports, most of them, 16 of the 19 that are actually putting out public reports, they say it is a buy, okay? But it's a more nuanced conversation here. So they have a strong backlog in MRO demand, meaning that they have a lot more interest and demand for their new engines, but then the MRO demand, which is the aftermarket servicing of the existing fleet of engines that are already out there into the world, both of those seem to be crushing it. That seems to be like really strong. Both of those seem to be crushing it. It's just like, it doesn't seem like it's, it doesn't seem to be like that much of an issue, okay? They're generating strong free cash flow. The engine that was part of this LEAP program should be profitable in 2026. That's a good turnaround story. And that's going to also start having a lot more of the MRR revenue as well. So like long thesis, I think it's pretty fair. The short case, what folks are kind of like concerned about, valuation, supply chain exposure, right? I think broadly they have a supply chain that's literally global. So they're impacted by tariff conversations, all those different things. Sometimes it could be a good business that is just like overvalued, right? That is a very long name. I'm going to try to pronounce it. Coley van Gilder. So hopefully I pronounced it right. I'm sorry if I butchered it. But the short-term narrative is that it's just like, this is like an extremely pricey industrial business, right? Like everything's trading at like an insane value proposition. Is your name Cole Van Gilder? Cole Van Gilder. I try to make sure I pronounce everyone's names right, but I might have butchered it. I said it right? Okay, cool. All right, thanks, Cole. I appreciate that. I really appreciate that. So this is a really important point here too. So if their mix from new equipment is going to be increasing, that has a lower margin profile versus the MRO revenue, right? The MRO, like the overall revenue, is like, if the more aftermarket servicing that they do, the better. The more brand new engines they sell, the worse the margin profile. And valuation is largely influenced by mix, margin profile, growth prospects, and pricing power. And if all of that is hinting towards them having lower pricing power and more equipment sales that are lower margin, that can put a little bit of short-term pressure on a particular stock. All right. And they're investing a lot into the GE9X engine, which is just like, it's not making that much money. It will later, but it's going to take a little bit of time, like the LEAP one did. Okay. Then the supply chain and competitive dynamics. Safran, it seems cool, but I don't think they're touching them. RTX, I don't think so either. I don't think there's like a real concern from a competitor standpoint on from these other folks. Like GE has 3 out of the 4 flights uses their engines. So I don't think competitiveness is really an issue. And then when it comes to the supply chain, but let's see what AI thinks. AI says this is likely a long candidate on pullbacks, meaning once you can see some broader announcements about tariffs or competitive dynamics causing a little bit of short-term pressure, AI thinks it's a good buy. Definitely not a short. And the play is likely patience and wait for some pullback post earnings and then dive in because the fundamentals of the business seem to be incredibly well, right? They want to increase their MRO revenue. They're launching a new product, which is the GE9X, and that should then enter the MRO cycle in a handful of years. They have very strong competitive moats and market positioning. And it's like a blue chip name, kind of like Coca-Cola when it comes to engines. And the only thing is just like it does have a very short-term sensitive exposure to tariffs, geopolitical stuff, announcements from their customers like Boeing and all that to see if they're actually gonna be buying it. But if you think that people are going to still continue to fly, and if you think that GE has a best-in-class brand equity and they're able to execute on this MRO play of just put more GE engines out there into the world and focus on a lot of servicing on it, it could be a buy. It could be a buy. Now, invest at your own risk, all right? This is just diligence in public. But that's how I'm thinking and learning about like this particular opportunity when it comes to GE Aviation. But then there's the GE Vernova stock, right? This is like a massive business, and power, wind, electrification, and accelerators, it's like a whole different story, right? Now do the exact same thing for GEV, right? Like it's like an exact different story when it comes to GEV. And they're focusing on a big theme called energy transition. Does everyone know what the energy transition is? It's like diversifying away from just like traditional oil and gas and trying to make a more resilient energy sector as well as grid, right? They're trying to do whatever they can to ensure that the world is no longer just powered by oil, but powered by renewables and other more sustainable long-term solutions for energy transition, grid resilience, etc. And they have power, they have gas, nuclear, hydro, steam, they have wind, and then they have like the grid stuff and the electrification stuff. I think their biggest thing is just like they're huge. I think folks aren't spending enough time looking at this. I think this is where the money is for GEV. The fundamental narrative is a top pick status in the AI age. The boom in power consumption from AI data centers has created unprecedented demand for base load power, which renewables struggle to provide consistently, and grid equipment, giving GEV significant pricing power and extended lead times to 3 to 5 years for critical items like transformers. This is huge. This is huge, right? Think about it this way. The grid sucks, right? Our transmission distribution infrastructure, our power lines, a lot of that stuff is outdated and it was built for 100 years ago. In order for us to handle the demands that we're going to be seeing, right? In order for us to handle the demands that we're going to be seeing from AI, from renewables, from connected homes, from EVs, you need to invest in the grid. One, there needs to be maintenance of replacing all these poles and replacing the wires and stuff, but there also needs to be sales and maintenance or sales of new equipment like transformers, substations, really big pieces of power equipment, which GEV provides. But there also needs to be maintenance on that existing stuff and repairs and upgrades to ensure that the capacity that you can push through that grid infrastructure can handle that. And the biggest driver of that is just AI. Plain and simple. Like the biggest driver of that is AI. And it seems as if they have like some sound products that's handling the power needs of the AI ecosystem, right? This is fascinating. And if you want to go crazy on like a really, really, really deep hedge fund style, figure out the suppliers to them. Like figure out for the GEV data center equipment sales, what goes into a GEV data center product? What are those pieces of equipment? And you're going to find a bunch of other businesses that are solving choke points that probably have incredible like growth potential. Hey, I'm just showing you the way. All right. But I like this. It does power, electrification, and wind. All right. Bull thesis, energy transition, guidance, cap allocation. They're doing the right. And then the short thesis, a lot of this is just short thesis, is that like things are pricey right now and the supply chain is just like, it's sensitive to geopolitical as well as raw material cost. And then the wind segment, that's the only thing that I have against this stock is their exposure to the wind segment. Like the wind segment is just like so many wind projects being shut down right now. And it's just like, that just completely wipes out that revenue profile. So just be careful with that if you're gonna have too much wind exposure. But let's vote, chat. Let's vote. If you had to invest in GE, I wanna know which one would you pick? Which GE? GE engines or GE power? All right. Or neither. It could be neither. All right. But vote in the poll, y'all. Vote in the poll or put in the chat. I want to know which one you all would prefer. Cole says RTX will improve because Trump is going to increase military spending. That's really solid. That's a solid thesis. GE probably has a lot of military sales. And then after this, we are going to touch on Edwin's amazing business. Well, investment opportunity. Investment opportunity. So there we have it. That is GE. And then the healthcare one, we talked about United Healthcare already, but you know, both could be cool. I wish GE just stayed together as one business. We can just allocate it to it. But now it's just like, it's incredible how they're three separate, and these are massive businesses that employ hundreds of thousands of people. UNH, the vote that we had on UNH, it was people unanimously voted that it's a understand if the rate adjustments is a long-term thing or if it's a short-term play. And if it's a short-term play, you know, it could potentially be a buy and a correction. Let's look up Tenet Health. Tenet Healthcare. What do they do? Healthcare services, partners, surgical partners. That could be a good one. Let's add that one to our watch list as well. Tenet Health. Thanks, A-Dub. Appreciate that. What y'all voting on? All right. So while you guys are voting on that, I want to talk about this. I want to talk about Texas. Edwin, do you have anything to say about this business before we dive in? Whoa, what are these pictures? Oh my goodness. Oh, chat, how do I? There we go. What the heck? Let's unpack what's going on here in Texas. All right, so we found ourselves, well, we didn't find it. Edwin did. Edwin found us a turnkey business for sale, fresh start garage and home. Selling for equipment cost only, business system included, free. Wait, first and foremost, I never knew that you can buy businesses on Facebook. I never knew you could buy businesses on Facebook. What the heck? Like, this is a thing? That's actually kind of wild. All right, looking to start a profitable business. I'm selling my fully set up fresh start garage and home operation. Perfect for junk removal, garage clean outs, home organization, and haul off work. Does it come with the license? That's my very first question. All right. What you get, the truck and the trailer, all tools and equipment, full marketing plan, emphasis on plan. All right. Complete advertising plan, ready to made video content for ads, branding and name included. Everything is already built. Just take it and run it. Why it's a deal? This feels AI written. I think AI wrote this. Why it's a deal. Only paying for the equipment value. All businesses, systems come free. Turnkey. Start earning today. Okay. Now, it's selling for $65,000. You're buying the truck and the trailer. The truck looks like it's relatively brand new. It's got a license that says April 2025. My only question, why Why does it seem incredibly brand like are they selling a setup startup? You know? Are they selling a startup that's already set up? You know? Buy your job from Facebook Marketplace. This does seem like you're well, first and foremost, this 100% I agree with you. Nadal. This is a buy a job type of thing. There's no team here. It's only equipment. But I'm concerned that they haven't actually done anything yet. You know? I would have assumed that they would have marketed total years of operation as well as how much sales they've generated to date, how much cash flow they generated to date. Like what it seems like they've put together here, Edwin, is that they've bought a truck and a trailer and they have added a wrap on both of those. They have a logo, they have a website, and they have a cell phone, but they haven't gone to speak to customers and built a pipeline yet of these customers, right? So I think that's one thing that you want to like dive into is like trying to figure out and unpack how many customers they actually have, or at least the pipeline of customers. Because what's the difference between you buying this for $65,000 versus you getting your own truck, your own trailer, wrapping it, and then having AI put together a marketing strategy and plan, and then opening an Instagram account. A business is valuable when you have existing cash flow that you can start to acquire and step into, or I don't know. How do we feel about this, y'all? Because it's like now it's just about, because I'll tell you right now, to get a business from this has gone from it's not 0 to 1 yet. Like a startup is 0 to 1, 0 sales to 1 sale. I think this has gone from 0 to 0.25. You get me? I think this has gone from 0 to 0.5 or 0.25. So they've done the hard legwork for you. Now they need someone that's talented and needs to have a license. Emphasis, they didn't put anything about the license in here. They didn't put anything about the license. And I think there might be a license that you need if you're going to be doing garage sales and home service stuff. So you're going to need the licenses for that. But it's tricky, right? Like it's actually getting a little tricky here. Now I'm like, like why would I not? It's like a fully set up startup. Exactly right, Lyrics Tube. And hey, how you doing? Hope you're having a great day. It's a fully set up. I didn't know this was. I didn't know they did this. I didn't know people did this before. They set it up for you and then they sell it. It makes sense. It could be a clean play, right? Like they could have gotten that truck off of a junkyard. Like they're flipping a startup. They're flipping a startup. That's exactly what they're doing. My only reason is like, why would you go through all that headache of building it and then not giving it a shot to generate revenue? Like, why stop there? That's what I don't get. Like, why stop there? Like, you did a lot of the work. Now it's just about going door. Like, literally, now you just got to go door to door. Yeah. But granted, this could be a bagger, though. This could be a good setup to where, like, Edwin, if you're very familiar with, like, this area, and you, like, imagine this. The only thing that this is missing, theoretically, employees and a pipeline of customers and a license. If you have a license, if you got a team, and if you already have existing relationships with homes and communities and HOAs and neighborhoods, this could be a pretty compelling opportunity. Like this could have been set up by someone that just knows everything about operations and the equipment. They could know nothing about sales. And if you're a salesperson, you could take this literally from 65,000 to like 650,000 potentially. My only thing is just I'm so curious. The only little red flag that I have is why would they stop there? Like this is a brand new license plate, April 2025. Like they literally just did this stuff. Why give up this quick in the game? So if I were to do diligence on this, oh, it's been there a minute. Oh, okay. Maybe it's like new equipment, fresh. Oh, wait, is this franchise? Nope. Oh, hold on. Wait, go fresh start. Oh, this is a completely. I didn't even know this was this. This is a. It's a cleaning business. Deep cleaning, power washing, or complete garage makeover. There's no customer. Oh, wait, they do have some customers. You gotta be careful though. These are AI pictures. That's an AI picture right there. It's Michael R. Hold on, guys. Is this a scam? Everything here is AI. Hold on. Let's ask some fundamental questions here. I think we might have found a scam. Here's the patterns I'm building. The business has a truck and a trailer. It's listed on Facebook Marketplace. It's a setup startup, meaning that they've set everything up. You go to their website. Pretty compelling, good, clean website. I see no realistic pictures. This isn't a realistic picture, by the way. This can be literally someone's front yard. All right. But no like before and after testimonials. All the pictures are AI generated. I can recognize Nano Banana when I see it. It's doing 3 very different, not very different. And then the testimonials don't include dates, don't include reviews, and are AI pictures. That's an AI picture, I can tell. Right? I think it could be a scam. I think it could potentially be a scam because if you're going to do all of this AI work and setup work, you literally can use AI to build a pipeline of customers and start banging out phone calls and going door to door. Edwin, I'd be very careful with this one. It sounds extremely exciting. It sounds really cool. And granted, you literally could be, look, I'm not saying someone would do this, but someone could do this. Someone could just be using the same truck, using the same trailer, and just rinse and repeating wraps and websites. And then banging out those listings on Facebook, platforms that are not verified, not diligenced, not registered. It takes less than 24 hours to put a new wrap on a vehicle. You feel me? They didn't even show the tools that are included. I'm not saying there are scammers in Lubbock, Texas when it comes to business scams, but I do know that there are some businesses that aren't legit. So I would be very cautious with this one. I will buy an index fund. Just like Nadal said, I will buy an index fund. Chat, this is a pass for me. Edwin, this is a price for me. Or not price, a pass. Am I right? Or like I'm not being overly like cautious, right? Like I'm thinking about this the right way, guys. Keep me very honest too. Keep me very honest. And granted, I don't own a home service business, and I don't invest in home services. I invest in bigger, more industrial services, right? So this could be the status quo for this industry. This could be the status quo. You know? The emojis, this is AI. AI made this. Like whenever you see stuff like this, and this is a page break. Page breaks with this, that's literally copy and pasted from ChatGPT. And there's no details around the pipeline. There's no details around like anything operationally about the business. You're Edwin, you're digesting it a little bit more. Edwin, did we just save you from potentially buying a scammy business? Edwin, did we just save you $65,000 from a scam? I think the biggest red flag was like it wasn't a biz buy sell listing. Like let's look at a biz buy sell listing that does almost the exact same thing. You know what, Edwin? You potentially were scammed, and we are going to avenge you by finding you a real business. All right. I don't want you leaving thinking, oh, dang, Kenny shut down my business. No. We're going to find you a real one. We're going to find you a real one. Just because you sent us the listing, we are going to find you a real one in Texas too, by the way. That is also decluttering. All right. Oh, we're cooking. Eco-friendly junk removal. And it's a 2x multiple, and it does cash flow. This is real cash flow. Home staging, no, maybe not that. But let's go back to junk removal. Or like garage. Let's see what they got in garage. Nah, not that one. Let's keep looking. Let's keep. Ooh, here we go. Garage organization. All right. Yeah, guys, you gotta be careful. There are real scams out there. Even sometimes on these are scams. So you just gotta be very diligent and very careful. Always use QOV before you buy a business. And before you even spend an offer, look at QOV. And that's the quality of earnings report. All right. This one does garage cleaning and transformation. It's been around for 12 years. It has $135,000 of cash flow. And it's in Texas, in Dallas. All right. And it's got 5-star reviews on Yelp and Google. It's verified. It's got a lease on a warehouse. And the reason why they're selling, the owner does not have the time or capacity to expand the business. This seems like a subpar business, but it's a good one to start getting some diligence around like what do better businesses look like. So that's one. There you go, Edwin. But then this one here was exciting. Oh, no, not anymore. But eco-friendly junk removal franchise. First and foremost, it's a franchise. So you're kind of buying into the franchise. All right. Then the year that it was around is around 2020. That's kind of okay. But if you really think that there is like a really thriving junk removal ecosystem, this could be worth a look at. That's doing the margin profile on this 15-20% margins, asking a 2x multiple. My only concern here on a diligence perspective is that it's only been around for 6 years. It hasn't really seen a recession, you know? Like whenever you guys are looking at businesses and you see that the business has been around for like sub 10 years, that's kind of like a little bit of a red flag, you know? A little bit of a red flag. Hey, Hamza, how you doing, champ? Hope you had an incredible day, man. But Edwin, scammers are getting creative these days. They're getting very, very creative these days. All right. And if anybody here is tuning in and they are employed at Fresh Start Garage and Home, I sincerely apologize, but I just have not developed an envelope of trust with you yet. I trust my gut and my diligence and my instincts. And all of that is telling me that I don't think you're doing organizing services, deep cleaning, junk removal, and power washing in Texas. If you're selling this business on Facebook Marketplace. Right? And why is there another like used trailer right here without any signage on it? You know? I don't know. Drop down below. What do y'all think? Scam or not scam? Put in the comments. Scam or no scam? All right. Let me know what y'all think. Y'all think it's a scam? Anyway, hopefully this was helpful for you, Edwin. And Lyric Tube says scam. No. You're not. No, not at all. Dude, that's what we're here for. We're here to learn. I would have gotten excited about the exact same thing. But it just takes time to just like get up to speed. And then Edwin, literally, I've looked at probably 10,000 businesses in my career. I can spot these things super quick. Right? So, and you're an operator. You know what I'm saying? Like you're in the field doing real hardcore work. You don't have time to be looking at businesses like how I do. So it's like naturally you could get excited when you see an opportunity like this. So it's not your ignorance at all. It's just simply the extra layer of like a professional perspective that I just added to it. So anyone will fell for this. Anyone. And I'm just appreciative that you put your thoughts on it and shared it with us. Because that listing that you shared, it just literally taught all of us here. It just provided an entire community benefit of like, now I know, and hopefully everyone else knows, when you see something on Facebook Marketplace, probably avoid, right? If it doesn't talk about the existing pipeline or revenue that they've generated or cash flow ability, now we know it's kind of like an extra layer to just avoid. Like Chris says he didn't even think about it, right? Chris says he didn't know that there could be business listing scams. Now we know, you know? Then what's this one here? This one seems like another scam. No revenue. Doesn't even talk about when it was listed. This right here is probably the same thing. Oh, I don't know if this is the same county, but it could be the same thing as this. And it's on Biz Buy Sell, right? So this scam could just be another thing there. Like if it's existing, why are you not talking about how much it makes? And this is another formatting of ChatGPT too, by the way. Right? There could be scams everywhere. Like, why are there no details on this? Why does every other listing give us data was established, revenue, profitability, but you don't? Like, you're that special? You're an $80,000 business. What are you so scared of to tell us about the numbers? You're an $80,000 business. There's $8 million businesses that are telling us the financials. Why are you so special? Right? You get me? So it seems like the consensus is chat thinks that's a scam. I think this one is too. Yeah. So you just gotta be careful out there. If you're gonna buy a business, do it the right way. By, of course, watching every single one of my freaking videos and learning and investing diligently. But then also just be very cautious and careful out there because there's a lot of bad actors sometimes. And I don't want anyone out here to lose their money because they fell into the promise of something that is just not actually legit. So let's ride. All right. That was so fun. Thank you for that, Edwin. That was a good one. That was a really good one for us to just like, that was a good thing for me to look at, to just remind myself and just like, all right, I look at a lot of stuff. Let me just take a step back. Let me just ignore the BS, ignore the low quality stuff. Let me not overextend myself on businesses that aren't giving us financials. And let me just focus on my circle of competence, sources that I know, businesses that I know, industries that I know. And let me just swim in that little pond there and find the best cash flowing business. I don't need to find everything. Let me just focus on my circle of competence and lock in on that. You know what I'm saying? W pitch though. It wasn't really a pitch. It was kind of just like a, let's look at it together. And guys, that goes for everyone. It goes for everyone. Feel free to add it to the Discord to just give us a listing and pitch and give us details, right? This is what it's about. But also, if anyone's in the Discord, summarize or comment what we just came up with so that people don't go into the Discord and click that link and think it's a buy. Let's look at that together. Or someone or Chris, if you're gonna be around, comment in the Discord like what we learned about it, of just like the key red flags, the things that we're missing, and why it's a pass or avoid. So Edwin or Chris, if one of you guys have Discord access, just make sure that you guys, because there's gonna be people that didn't watch the stream and then go in there and click the listing, and then someone might actually try to buy that. But let's just warn them that like, hey, FYI, we diligence this together, and it seems like a scam. Avoid it because of 1, 2, and 3, right? So that would be really appreciative if anybody is in a Discord can put that in there for community learnings and benefits. Someone else gave me a stock to look at, right? What else? Hamza says, did we already talk about United Health stock? Yes, we did. But the VOD is it's gonna be uploaded like literally right after this. And on the Kenny Finance second channel, Kenny Finance Live, we're gonna be having all of these good segments and clips with a little bit more added flair and appeal to it. So go sub to that channel, Kenny Finance Live. We're already banging out some content on there. And I don't know if it's in the description. I don't know if I don't see what you all see on my stream. So I don't know if it's in the description, like the second channel. But if it's on there, go ahead, click that and click subscribe. But the videos of like some of our really deep dives and like cool commentary, a lot of that stuff in a long form format is gonna be coming out every single day, or not every single day, but like every other day. And so check that out. Am I missing any diligence? I think we learned a lot. My head feels like it's expanding. Doesn't it feel like that? Do you guys feel like that? My head feels like it expanded in the last like hour or two. Like we learned so much. I think it's mainly because of healthcare. Thank you, Meyer, for the follow on Twitch. I appreciate that. Thank you. I really feel like it's I don't know. My head doesn't hurt, but it just feel like it's like my brain is growing from like how much we consumed and learned today. For me, it's primarily because of healthcare. Healthcare is a very tough topic for me because it's like hard for me to understand. But I think I tackled a big learning curve in the healthcare space to understand like the real narrative with a lot of these healthcare names. And the big picture there is just like they want to protect against customer churn. They're able to keep and retain customers primarily because they're offering a lot of these really good benefits, right? They're offering these really good benefits. They're offering these really compelling rates. But with the rise of cost of healthcare, the increased utilization of healthcare, but then more importantly, the proposal to have flat rebate rates, which crushes the budget that they have to reinvest in some of these benefit offerings, that is really, really, really going to be putting pressure on the value prop for big health insurers, for those that have large exposure into the Medicare Advantage program. I think it really changed the entire algebra. So unless this is a short-term blip, it could be an exciting opportunity. Thank you so much, Hamza. I appreciate that. Thank you so much. That vid's probably gonna come out literally in a handful of days. So it's gonna be a good watch. There's no long form videos on that right now, but like once my team is done editing it, because they got a lot of stuff to edit, it's gonna come out like crazy. It's gonna be so fun, guys. But hey, we learned so much, and then we learned about GE. Like that was super sick, learning about GE. And now we know the narrative around like what's happening with their planes, their MRO revenue, which is their aftermarket service revenue. But I think the healthcare one was probably the most fascinating topic that we like tuned into and really unpacked at a fundamental level. And W to everybody that was like at the beginning and watched that and like just rewatching, just like it's really good to just piece it all together. Like it's just like it's big, it's massive, and it's relevant and it impacts everybody. But as I mentioned when we said it, the best thing you can do is just ensure that you're taking care of your physical and your mental health and your diet and ensuring that you're doing whatever you can to live a good life so that you aren't frontline dependent on a lot of these healthcare providers, insurers, and hospitals. Because costs are rising. That is a fact. Insurance companies' premiums are being cut, and it's just like economically it can be a choppy space. But if you just stay healthy, you're chilling. All right. An apple a day keeps a doctor away, and a live stream a day keeps the shredlers educated on how to make some smart money moves. All right. That's how we're rocking and rolling, y'all. That's how we're rocking and rolling. All right. Speaking of health, I'm got to go to the gym before the gym closes. But this was a W fun stream. I learned a crap ton today. Tomorrow I think are early tomorrow, right? I think because we have earnings, a lot of earnings tomorrow. So tomorrow we have, let me check this out. Tomorrow we have Microsoft earnings, Meta earnings, and Tesla. That's a big deal. All after market. So, and I'm going to be listening a lot to hear about how Meta and Microsoft are tuning into AI spend, right? So that's usually a good indication of whether or not AI is going to continue to group, is whether or not these hyperscalers are investing a lot into AI and seeing an ROI on their margins. So that's a really important thing to see. And then for Tesla, I want to hear about their humanoid robots. I don't care as much about the car sales, I think they're still going to crush it. Tesla cars are going to be everywhere. But I want to hear about the progress that they've made on their robots, on their humanoid robots. Because at Davos, he said that like by the end of next year or afterwards, we could have a lot more consumer in-home humanoid robots. So that's what I'm hyper focused on for earnings tomorrow for Tesla. So, wow, the vote is a really even split. That's actually pretty cool. It's half GE engine, half GE power. That's compelling. Oh, this boy Boogie joined. You late, man. We leave by the wrap up. We've been cooking. We learned about healthcare. We took a play on United Health. Oh, you said it was amazing? Thank you so much. I'm glad you guys really enjoyed that. We went deep. I told y'all, this is like, I'm putting you all through the ringer as if we were actually a private equity fund or a hedge fund and like going through the real forms of diligence to get incredibly smart on some of these things. So, Nadal, I'm so glad that you enjoyed it and that you thought it was amazing. And yeah, Boogie, we're doing an earnings deep dive tomorrow. Actually, we're gonna do live reaction. So we're going to watch together the Microsoft, Meta, and Tesla earnings with our thoughts on like the actual stock price as it reacts to what's happening. So that is, I'm warning you guys now, it's going to be earlier. So it's not going to be 6:30 Pacific time, aka 9:30 Eastern. It's probably going to be 5 p.m. Eastern time, 2 p.m. Pacific time, because earnings is really, really, really early. Earnings happens right after close, usually. All right. So I'll add it to the schedule. And then you guys will see that there. But as always, we just out here making smart money moves. We're having a good time. Everybody's out here learning. Oh, the other big thing too, Bug, is we protected Edwin and everyone else in Texas from being scammed. We looked at a business that was actually a scam. That's my first. But as always, chat, we're going to close out with the song that gets us going every single time and get us inspired to make some smart money moves. But I want you guys to understand there's a lot of work that needs to go into having conviction on a name. There's a lot of work that goes into this stuff before you spend a single dollar on an investment. You can't look at a chart and call yourself a smart money move maker. You gotta dig into the details. You gotta study the industry. You gotta dive into the patterns. Don't just look at one earnings, look at all of them. Don't look at their customers. Check out the customers, the suppliers, the regulators. Piece together the themes. And then do that every single day for years on one sector, on one name. Like, we gotta strive to be the smartest people in the entire world on a particular asset before we even think about buying something. You can't be a billionaire by being surface level, I'll tell you that. You're not gonna be a billionaire by being surface level. All right? Billionaires have expertise. Billionaires have perspective. And with that, chat, let's keep making these smart money moves. Let's just get smarter every single freaking day, all right? My brain is literally expanded today. Like, it feels like it like grew bigger. All right, chat. I love every single one of y'all. I appreciate y'all taking the time to lock in with us. Take care of yourselves. Take care of each other. Stay happy, stay healthy, so you don't have to rely on health insurance companies, because as you can see, economics are changing. And peace and love, and I will catch y'all tomorrow. Peace. Oh, and W chat capital AUM. We had back-to-back days of going up to the moon, baby. All right, chat. Love y'all. Be easy.